Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
That would be me. I am the IRS Solution Attorney, Darrin T. Mish. I'm joined today by my lovely and talented co-host.
That's me, Katrina Madewell. Welcome to the show. We're glad to have you today. It's a little different out of the norm. We have a guest today.
Oh, we sure do, and I'm really excited about it. But don't we have to talk about the weather or chickens or something before we go straight to...
No, we have to talk about our guest.
Okay.
We're excited to have her.
We have to talk about the World Series.
Really?
Well, we should talk about that, some of us are very tired because we stayed up and watched it.
And that is Pat George back there, always keeping it real. Okay, go ahead. I didn't watch the game. You fell asleep.
Well,
Do you even know who
Darrin, were
won?
you happy who won?
I was happy. It's always kind of cool to see.
Who won?
The Cubs. The Chicago Cubs broke a 108-year, losing streak. And it's always kind of neat to see history. Even if I hated the Cubs, and I really don't. I don't really have an opinion. I'm a Dodgers guy. But it's still pretty cool.
I thought about this, that, they always talked about the curse and stuff like that, but all of the people that have passed on now that never saw the Cubs win.
I just saw a meme 5 minutes ago on Facebook that said that there's people rioting, Cubs fans rioting in heaven right now.
Right.
So I don't watch baseball. Was this number 3? Was this game 3?
No, that was game 7. That's it.
7.
It's over.
See,
Yeah.
I don't watch.
See,
I'm
that's why we're
obviously
talking
not
about.
following it. So they
How
won?
many bases are in baseball there,
I
Katrina?
know that. My son played Little
There's
League,
5,
but I
right?
don't follow it. Yeah, thanks. No, that's guy talk. That's not baseball talk.
Okay, so we'll get to our guest. We won't keep her waiting any longer. This is really exciting. It's really exciting because I'm a fan, sort of watching her in the background for a lot of years. Why don't we go ahead and get Kay Bell live here? Is she live? She's here?
Yeah, she's on. And the topic for today's show, we're going to make it her website, which is Don't Mess with Taxes. Sound good?
That sounds wonderful. Kay, are you there?
I'm here.
Fabulous. So you don't know this, but I've been a loyal fan and reader of your website for probably over 10 years. I've been in the IRS problem-solving niche for pretty close to 20 years. But real quick, let's introduce you. Kay Bell is an award-winning journalist and blogger who's been writing about taxes for almost 2 decades. In addition to her knowledge of the tax law nuts and bolts, Kay has insight into the political aspect of taxes thanks to her almost 20 years in Washington, D.C. as a Congressional and House Ways and Means Committee staffer and government affairs specialist for 2 Fortune 100 companies. Kay blogs daily about tax topics at don'tmesswithtaxes.com and is the author of the book, The Truth About Paying Fewer Taxes. She's also a contributor to 2 other personal finance books, as well as a writer for a wide variety of financial websites and clients in Austin, Texas, where she currently calls home. So, Kay, welcome to the show.
Thank you for having me.
We're glad to have you.
So, Kay, your bio mentions that you worked almost 20 years in Washington, D.C. as a Congressional and House Ways and Means Committee staffer. What was that like, and how did it influence your decision to become a journalist and a tax blogger?
Well, when I hear that 20 years, first of all, I'm compelled to
Ouch.
say I started as a teenager. Okay, well, that's not really true.
I like that answer, Kay. I like it very much.
It was really exciting. My husband and I went up there right after we got married. We were from West Texas. We thought it would be an exciting little change. We'd stay there a couple of years and come back home, and then, time just continues to roll along. As people know, as the Cubs fans who waited 108 years, so, it just catches up with you. So, and I just sort of stumbled into working with a congressman who was on the Ways and Means Committee, and boom, there it was, I kind of got hooked on taxes.
That's fascinating. So I bet you it was a big change from West Texas to Washington, D.C.
It was. I mean, first of all, I came from a desert area, and here I am suddenly in the muggy, built on reclaimed swampland, D.C., a city that was a gazillion times larger than any place I had ever lived, craziness. But the fun thing there was I was there during the last major tax reform. So when people talk about reforming taxes, I always go back to 1986, the Historic Tax Reform Act of 1986, where I always thought historic was part of the official name of that law. So.
I mentioned before I really love your site, don'tmesswithtaxes.com. So you're a proud Texan as well.
I am. And, when we came back home to Texas, and I thought about what I was going to do, and my husband actually is to get the credit or blame, depending on your point of view, about my blog. And I was trying to think of what to name it, and, just seemed like flipping a couple of vowels was perfect from where I was, going from Texas to taxes, and it all seemed to work out.
I really love and admire the pride and enthusiasm that Texans have about their home state. I think it's really fantastic. I think that my wife and I may someday retire to Texas because there's just so many aspects about it that I really admire. I love just the wide open spaces, and I love the attitude of the people in Texas and how friendly they are.
By the way, their real estate stuff is really wacky. Because back when I used to write loans, we used to do loans in Texas, and wacky stuff. You cannot do anything without your spouse. It's pretty bizarre, right?
We are a community property state. That's one thing I told my husband when we left Texas, that even though we were going, we lived in D.C. for a little while and in Maryland. I said, remember, we were married in a community property state, and I don't care what the laws say. We keep a community property wherever we go. So.
I represent clients with tax problems all throughout the United States, and I was actually born and raised in California, so there's community property, in California as well. But it's funny now that I live in Florida, when I have these clients in Texas and California and Nevada and some of the other community property states, I always have to remember that community property exists. It doesn't come up in every case, but there are cases where you're like, darn, I got this darn community property thing I've got to deal with. I've got a case right now out of California where we have a liable husband and a non-liable wife, and it's just a mess because non-liable wife can technically be held on the hook for the non-liable husbands or the liable husbands, taxes that pre-existed when they got married. So it's really crazy. I always have to remember that about the community property issues.
Yeah, it adds a nice, interesting twist.
The bottom line is, I guess if you live in a community property state, you want to be careful who you marry.
Well, I think that's right. And I just did the research on this particular case because I had to dive deep into California law to figure out what the answer was. And as I was reading, I was like, oh my gosh.
Ouch.
Oh my gosh. I'm pretty much positive that she did not know about this, statute, because if she had, there'd be a big fat prenuptial agreement, in existence, which does not exist. So it's kind of a problem. But back to UK. What is it about? I mean, you shared a little bit about being, ending up with the job on the committee, the Ways and Means Committee. But what is it about taxes that made you decide to dedicate your life to, reporting on them?
Well, I think basically it's because we all have to deal with them at some point in our lives. Hopefully we don't have to hire someone like you who has to work us out of trouble, but we do have to deal with it, and it's the most immediate contact that most Americans have with the federal government. It may be once a year when they get a refund from Uncle Sam or they end up having to write a check, but it's there. It's every day if you work. It shows up in your paycheck. So we don't think about it, but the taxes start when we're born. Our parents, they're happy to see us, but they're also happy suddenly they got another exemption on their tax return. They get lots of credits, some deductions. So, taxes are there from the get-go for us, and if we don't pay attention to them, we can get in trouble. So it strikes me as something that is integral to everyone's lives, even though we don't think about them like I do almost every minute of the day.
So, Kay, I have a question for you, because I was listening to Darrin in your bio talking about how you were a journalist for over 20 years and, turned blogger. How has that changed your industry and basically what you do when, basically the blog platform opened up and I guess that freedom of speech was a little bit more free across everywhere? How's that changed things for you?
Well, that's one of the things I like about blogging is the immediacy, and the Internet has allowed people to share things for good and for ill, unfortunately. But that's one of the reasons I like staying on the Internet. I want to be out there to help try to clear things up because, unfortunately, if a lot of people get things wrong online. So I get a lot of emails from readers who go, I read on the Internet, XYZ, I can deduct this. And I'm thinking, yeah, you got part of the story, but you didn't get the whole story. So that's why I always try to tell people, when you do get information, regardless of the source, don't just take that one piece of information as the truth. You need to check it out some, because especially with taxes, there's usually no cookie cutter for anybody. It always applies to you personally. And so it makes me have to, research things carefully, stay on top of the tax news. And that's kind of an exciting thing for me. So
it's funny that you say that, Kay, because we have this running joke in our house about there was a commercial about the French model, and where'd you see that? Oh, I got it on the internet. So that's pretty right on time with what you're talking about. We're going to take a quick break. When we come back in just a minute, we're going to talk a little bit more about some of the current big stories that you're working on and a lot more. Stick around. You're listening to the IRS Solution Attorney Show. Our special guest today is Kay Bell with Don'tMessWithTaxes.com. Back in a minute.
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution Attorney,
Mr. Darrin T. Mish.
Mr. Darrin T. Mish.
And I'm your
Forgot
co-host.
my name there for a minute.
I'll help you out when you forget it and stumble on it. It's all good. I'm your co-host, Katrina Madewell. And again, it's the IRS Solution Attorney Show. We have a very special guest today, Miss Kay Bell. She's out of Don'tMessWithTaxes.com.
Absolutely.
And that is TAXES, taxes. Made that sound a little bit like Texas. Did you notice that?
You did make it sound a little bit like Texas, but it's Texas.
Without an accent.
Yeah.
Okay. And so, Kay, let's recap about the first segment, what we chatted about.
Well, we were talking about what Kay's background was and whatnot, and how the website came about, and why we should even be listening to her. It's because she's been in this field for so long, for 20 years. She apparently started when she was 11. But anyway, Kay, let's talk about some of the big stories you're currently working on. I understand you've been covering a story in regards to how the IRS will be holding refund payments until at least February, or at least till February 15th. Can you clue us in on that one?
Sure. The issue here is that with one of the tax laws that was passed last year, signed into law in December, was the Protecting Americans from Tax Hikes Act, which tax geeks know as the extenders, which is renewal of all these tax laws that keep expiring. One of the provisions said that the IRS must hold certain tax returns until February 15, tax refunds on those returns until February 15, if the people are claiming a couple of popular tax credits, and these are the additional child tax credit or the earned income tax credit. And both of these tax credits are situations where you can get a refund even if you don't owe anything. Usually a tax credit can zero out your tax bill, and a lot of them stop there. If your credit's for $300 and your tax bill is $500, or, well, let me reverse that. Your credit is $500 and your tax bill is $300, it will take that $300 bill down to zero, but you have $200 of that credit that you get wasted. But if it's refundable, you get that extra $200 back as a refund, as the name indicates. And lawmakers are concerned that there's a lot of fraud in connection with these two credits, that people, they're complicated, especially the earned income tax credit, and people make mistakes, or sometimes they make up stuff to get that refund. So they wanted to give the IRS extra time to check those refund returns and make sure everything was kosher. And so they said you got to hold them this extra time, double check them, and then don't send them out until mid-February. So a lot of people who file early because they're going to get refunds and who have these two tax credits on their returns are going to be disappointed this coming year.
When does filing season typically start? It typically starts mid-January to the end of January anyway. Is that right?
Right. It starts about the third week in January. And so it's not a big delay, although if you get your return in as soon as the IRS starts accepting them, a lot of people get them, in early February. So it's not going to be a big delay. But if people are really counting on that to, say, maybe pay some bills that are due in early February, they need to make arrangements to not have to rely on that money, because it's going to be delayed, and the IRS is going to catch a lot of heat about it. They're trying to get the word out, but, it's going to come around tax season, and people are going to be filing as soon as they get all their paperwork, their W-2s and everything, and they're going to be going, where is my money? Where the heck is my money?
And to be fair, I mean, the people that typically get the earned income tax credit, for example, tend to be lower income folks, and they probably really are, counting on that money and getting that money as quickly as they can. Is this going to kill the rapid refunds for those two types of tax credits?
I think it might. These refund loans have kind of died. The refund anticipation loans, there's a lot of concern from consumer groups about these and how, people were getting these and not fully understanding them and ending up paying more for them, or their refund wasn't as much as they thought, so their refund loan wasn't as much. But, the concern about those had kind of taken those off the table in recent years. They kind of morphed into refund credit cards, but still they're not as prominent as they once were. But I suspect there are going to be some people who are going to start hyping these again come January to say, oh, you don't have to wait until mid-February. Come to us now. We can get you this loan early. And I think that's going to cause some problems and concerns among the financial community, the personal finance consumer community.
So just to be clear, is this going to hold up the entire refund? So if somebody was entitled to the earned income tax credit or the additional child tax credit, and they had a refund coming otherwise separate and independent, it's going to hold that refund up, whole thing?
It's going to hold everything up, yeah.
Interesting.
If you claim either of those two tax credits on your returns, they are going to hold the entire thing until February. Part of it's just administratively. It's kind of hard to separate. Well, X amount is attributable to this, and rather than send two checks, they're going to just hold the whole thing.
It does make sense from an administrative standpoint and an efficiency standpoint to just hold the whole refund, but I'm sure there's going to be people that are upset. The funny thing is that when you Google IRS here in the Tampa Bay area, my website comes up, my phone number comes up, and so I can only imagine there from the third week of January to sometime probably the third week of February or so, my phone is just going to blow up with people who are not real happy about this particular change in the law. Yeah. So it's good that we know, so at least we can tell people what the deal is. And that kind of leads me to this next question and that is, can the taxpayer advocate help expedite these, or is it just pretty much it's February 15th or nothing?
It's pretty much February 15th or nothing. I mean, by the time the taxpayer advocate got involved, most of these cases would be well resolved by the time Ms. Olson's office got involved in that. So it's just kind of like take a deep breath, stick it out. Or you could do something now to kind of help yourself out if you're going to get a refund and you're working and you're having stuff withheld. You might think about changing your withholding a little bit right now and get some of that money a little early. I know a lot of people love the forced savings over withholding, but in this coming tax filing season where the IRS is going to get to hold on to your money whether they want to or not, they've been ordered to do so by Congress, you might want to start trying to get a little of that back early instead of letting them hang on to it until mid-February.
Yeah, so for clarification, if you're a wage earner, meaning somebody who gets a paycheck and has taxes withheld, then you might want to file a new W-4. A lot of people don't know this, but you can file a W-4. I don't know if it's as frequently as you'd like, but more frequently than people file them for sure. And you file that with your employer. And you, for example, if you were having, if you claimed 0 on your W-4 so that they would withhold the maximum amount and you're anticipating a big refund, you might want to change that to 1 or 2, or depending on how many dependents you have, so that you can get more back out of your paycheck, like Kay's saying, so you don't have that forced savings, especially if, waiting until February 15th is going to put a crimp on your budget, then you might as well just get the money now.
And not to mention the fact that you're giving the government an interest-free loan. Let's not forget about that part.
Oh, exactly. I always, like you say, Darrin, I always say you can change that withholding as many times as your payroll administrator will let you before that person starts locking the door when they see you.
Yeah, I don't think you can do it daily, but you could probably do it twice a year. I do have clients that, for whatever reason, they want more withholding in the first half of the year or the second half of the year, and so they do that. That's not real common.
That doesn't make sense to me.
But I've seen it. I've seen weirder things than I usually, because of what I do, I help people who have tax problems. Usually what I see is, tremendous underwithholding. I see people who I just kind of peripherally worked on a case recently where this is wild. The employee actually wrote exempt from Social Security, from FICA and Medicare on the W-4, and the employer didn't catch it, and the payroll company didn't catch it, and this went on for like 3 years. Guy didn't pay any FICA.
And then he became your client.
And then then a subsequent CPA finds the error when she's doing, she's reconciling the 941s and the W-2s and whatnot. And they're like, okay, Darrin, what do we do? And I'm not going to share what I told them to do, but they asked me, what do we do? And I'm like, wow, that's kind of a mess. And who in the world decided that exempt from FICA was even a thing? But they
Maybe
did.
it's like the service animal. It's the white elephant in the room that nobody wants to ask any questions on.
I'm not sure. So the law that we were talking about with the delayed refunds, slightly delayed refunds, when did that go into effect, and how many Americans do you see being affected by that?
It went into effect in December. I think December 18th was the specific date it was signed into law. Again, it was part of what we tax geeks call the tax extenders bill, which is this series of 50 or so tax laws that are technically temporary. They have to come up for renewal periodically, usually every year or every 2 years. And this year they got through it relatively early for Congress. They got it done and signed into law actually in December, but a lot of them were made permanent, but some things will still have to be reconsidered. I'm kind of digressing here, sorry. But, yeah, it went into effect in December 18th, and it takes effect this year, and it affects the next filing season.
Hey, Kay, hold that thought real quick. We got to take a hard break here at the bottom of the hour. You're listening to the IRS Solution Attorney Show. We're on with Kay Bell. You can follow her at TaxTweet. She's on Twitter. We'll be back in just a minute. Welcome back. You're listening to the IRS Solution Attorney Show. I'm your co-host, Katrina Madewell. Mr. Darrin Mish is the attorney in the room, and he is your main host for the show, the IRS Solution Attorney Show. And our special guest today is Kay Bell with Don'tMessWithTaxes.com, and that is taxes. So we have another question for you, Kay. Can we talk about some of the other stories that you have working in your pipeline right now? We noticed that you're blogging about a $12 million spent on the unusable email system. Can you clue our listeners in on, what this was all about in case they may have missed the story?
Sure. The IRS has been mandated, along with all federal agencies, to get their technology up to snuff, and the goal was to have it done by the end of this year. One of those areas was the email system for the tax agency. They did some upgrades with their Microsoft systems, and they discovered it really wasn't what they wanted, but they spent some money on it. So now Congress is taking the agency to task, as it should, for spending this money for something that's not really working like they intended. So it's one of those problems where the IRS has got to try to get up to date technologically and still do their main jobs, and they're kind of running into some problems in coordinating those two efforts.
Does the fact that there's so much partisan conflict come into play, you think, where Congress is in a feud with the IRS and has been for a while now, and Congress continues to cut their funding, which also prevents them from being able to do these technological upgrades probably as efficiently as they would like. I'm no big fan of the IRS, and I don't make any bones about that, but I think that might be a reality. What do you think about that?
I think you've nailed it, Darrin. It's true. Congress has cut over the last few appropriation sessions the money that the IRS has requested to do its job. It's an easy agency to pick on. Even people who pay their taxes, they don't like paying them because they always feel like they're paying too much. So politically, it's a good point for members of Congress to make that they're taking the evil IRS to task, but they also fail to point out, like you say, that they are cutting the money that the agency needs to do its job. There have been former commissioners have sent letters to Congress saying, come on, guys, we really need this money to do our jobs, just like everybody. But until we get through this hyper-partisanship, it's going to stick. The IRS is just going to have to get ready to keep taking the hits, some of them well-deserved, some of them just for political posturing.
I think that I've read statistics that for every dollar in the IRS's budget, they collect something like $49. That might be off, but I remember it was a really big number. And so it does make sense that if you want to, raise the revenue and lower the deficits and in the debt and whatnot, that it might make sense to give more money to the IRS, perhaps with more oversight. I'm not really sure. One of the things that always kind of strikes me as funny is that the IRS, won't use email in dealing with taxpayer representatives and taxpayers. And so one of the things that they will do when we're obtaining, tax transcripts, for example, is they will fax them. Now, here's the irony. The irony is that their fax system actually uses email to transmit. And mine actually requires email to transmit to me as well. Mm-hmm. So it is that confidential taxpayer information is, in fact, going over the interwebs anyway, which is sort of an interesting, issue.
I don't know anybody that has a fax machine where it's literally still spitting out paper. It just doesn't happen anymore.
Well, I actually have. I have a physical fax machine, and I have one of the e-fax.
But you don't receive any paper on that fax machine.
We do from time to time. But the interesting thing is that's also over a VoIP phone line.
Well, there you go.
So it's going over the internet as well. So in even my voice lines at the office are going over VoIP. So even the phone calls are going over the internet. But
if the IRS were to revamp anything in their budget, it should be. We talked a while back about their system getting hacked. Protecting the taxpayer social from identity fraud and taxpayer. I told you, I've seen that numerous times where a client gets ready to buy a house and they realize someone else has already filed their taxes for them and collected the refund.
It's a huge problem. I mean, over 20%, maybe even 30% of my clientele right now, that have tax problems, have the ID theft sort of indicator on their file, which makes it harder for me to represent them. Kay, I'm going to put you on the spot a little bit. What do you know about that whole ID theft problem with the IRS and taxpayer confidential information?
It is. It's a big issue. And the IRS, after they got hacked, to their credit, they were looking into it anyway. They speeded it up. They're going now to what they call the dual authentication, which most of us know now. When we want to do something, we go in online, then we get a text from our for whatever the site is saying, here's the code you have to use now to get in there. And the IRS is doing the same thing now. They're going to dual authentication on most of their systems that get transcript, which was the area that was hacked. They're requiring that now. And when they're finished, everything you do online with the IRS is either as a professional who's using the special systems that tax pros have to deal with the agency electronically, as well as just individual taxpayers are going to have to do this doubling up, this dual authentication to get in. So they're trying to bring the system up to the standard of private sector right now. All governments are always lagging indicators with technology, and something as big as the IRS is typically in that area now. They're just trying to catch up. But to their credit, they are catching up slowly.
Yeah, like I mentioned, it makes it really inconvenient when we have taxpayers who have the ID theft indicator, because it actually locks the power of attorney, the tax rep. It locks us out of being able to use our typical, sort of online services that we use to access their taxpayer information. And so we have to make a phone call, and not complaining, but some of those phone calls are absolutely maddening. The people on the other end of the line who are trying to decide if I am who I say I am and whatnot are just so poorly trained. And it's a really frustrating experience. It takes something that would take me typically somewhere between 3 to 5 minutes and turns it into a 45-minute to an hour procedure where somebody with a kind of a bad attitude is giving me a hard time about it. And so one of the things that we're doing is we're actually having some of the staff at my office take care of it, because after almost 20 years of dealing with the IRS on a one-to-one basis, sometimes I'm not always the best person to talk to them. But we're here today with Kay Bell, and her website is don'tmesswithtaxes.com. That's not me talking with a southern accent. That's don'tmesswithtaxes, not Texas.com.
And she's also on Twitter @TaxTweet. You can follow her there and follow some of her posts and see what she's up to.
Yeah, I've been following Kay on Twitter for many, many years on Twitter, probably since just about when Twitter came out. Kay, I read on your blog a post that where you spoke with some former IRS employees who were forced to use secondhand computers at work. Can you tell us a little bit more about what that's all about?
Well, again, this comes back to the money. Show me the money. It's the system is woefully behind technologically. So when it's like a family, the the youngest child gets the hand-me-downs. And that is what, at least a few years ago, the agency was doing. When they got money to upgrade, they had to decide which areas, which divisions needed the systems, the newer systems most, and so they got the better equipment, and then the usable equipment just got passed down so that the people who had the least technologically up-to-date systems, that got thrown out and everything just shuffled down the line. So, you know, that's how they've been working, again, because they don't have the money to do a full system upgrade. But maybe Congress will eventually look at that and go, okay, we'll dedicate you the money and use it just for this, you know.
So in your opinion, it's a funding issue, not a mismanagement issue? Because I'm thinking, like, even teachers, you know, fundraise to get new Macs. Maybe that's I don't know. It's just a thought.
I don't know. I don't know if I want to see an IRS guy come to my door selling me, you know, cookies or something.
So one of the things you don't know, Kay, what you don't know, Kay, is we're in a studio that's literally like 100 yards from the local, you know, Taxpayer Assistance Center here in St. Petersburg, Florida.
Uh-huh.
And what just ran through my mind as Katrina was saying that is, okay, the revenue officer bake sale is this Monday morning?
The table out in front, yeah.
I have a feeling they would be selling brownies with a little something extra in it. I'm just saying.
Well, I have a feeling that there wouldn't be a real great turnout. I'm sorry. The Internal Revenue Service is just not one of the most sympathetic, you know, governmental organizations in our country. They just aren't.
Darren's laughing because I always throw those rogue little comments out there that aren't super serious, but they're pretty fun.
You know, you got to be careful, Katrina, though, because somebody at the IRS now is thinking that. It's like, this could work.
Now, listen, we're not in Colorado. We're in Florida.
Is there an average IQ of the IRS officers? I'm just curious. Anybody ever published a
All right.
poll on
So
that?
the average IQ of a human being is 100, right?
Okay.
So I have no comment. I don't know. How would I know?
That's a good attorney answer, Darrin.
The thing about the IRS, and I think Kay will agree with me, is there's some really terrific people that work there, and there's some substandard people that work there.
That's
but
every
But I think
organization.
you find that throughout government.
Yeah.
You know, is that there's some people who, you know, probably shouldn't have a job, period. And then there's some people that you're like, wow, that person is really good and probably, you know, probably could be working for us or
It's
somewhere
no
else.
different here at the studio. Look, we have Pat. You know, there's a lot of other subpar people we could have producing the show, you know.
Oh, boy, did you save your butt there.
He wants to talk about turkeys. He's looking at your post that says reduce tax turkeys with these easy November tax moves.
Yeah, I mean, the year is almost over. I can't believe it. I woke up, it was November. Oh, my gosh, what do you do here? Most tax acts you take to reduce your tax bill you have to do by the end of the year. So, you know, you need to start thinking about things. We talked about earlier adjusting your withholding. A good one to do is to bulk up your retirement plans. Put some money into your IRAs, even though you have until April. It's still good to get it in early because of the compounding factor. If you have a 401k at work, see if you can dump some more money in that. It could help lower your tax bill a little bit, and, you know, you're helping yourself down the line. So it's a twofer there. And you might even get to take a tax credit, the saver's credit, when you file if you put money into your retirement plans.
So, you know, Kay, we're only, 5 days away from the election. And I know you're not going to have much time to answer this, but I really wanted to ask you, and Darren's like ready to stab me in the side, how you think the political election outcome will affect taxes.
Gosh.
You want to answer that on your blog or on Twitter?
You know, I'll answer it everywhere. I think if Hillary Clinton wins, it's going to be a struggle again to get some major changes made simply because of the politics involved. If Donald Trump wins,
all right,
he's going to be more amenable to what Paul Ryan, former head of the Ways and Means and now Speaker of the House.
All right, hang tight. K-Bell with don'tmesswithtaxes.com. She's going to continue this conversation over there because we are out of airtime to talk about it right this second. We'll be back in just a minute.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Madewell, joined by our very special guest today, Kay Bell. She's with Don'tMessWithTaxes.com.
So before the break, you were talking, Kay, the question to you was, how is the election going to impact basically taxes going forward, and depending on who wins?
Yeah, short term, if Clinton gets in and that Congress stays controlled by Republicans, not much is going to change because there's going to be fighting, and there'll be some little tweaks, but nothing big. If Trump wins, we could see some more major changes, but either way, it's not going to be immediate. The whole cogs of government grind slowly. But, you know, it's a good reason, another good reason for people to get out and vote. It could affect your tax bill. So.
I can't believe that we're only 5 days away from election.
Thank
Finally.
the good Lord.
That means my birthday's in 5 days.
You know, and I'm a talk show, junkie. I don't just have my own radio show. I listen to talk radio all the time, and I've just realized that it's really stressing me out, and this needs to be over one way or the other. I just need it to be over. So, Kay, we really appreciate you coming in. One last thought that I had. I'd like to hear what your thoughts are. I've been doing this since the first Clinton administration, and my theory is that when a Democrat wins the White House, what tends to happen is taxes tend to go up, but the effort to collect the taxes tends to go down a little bit. And when a Republican gets in office, taxes tend to go down, but the efforts to collect the taxes go way up. Do you have any thoughts on that?
Well, it does go that way because there's a tendency for enforcement on that side. But again, if they're going to do that this time, they're going to have to give them money because even the tax enforcement side is falling, and there are fewer audits and fewer efforts to collect, which is good for a lot of people, but it's not good for the Treasury.
Yeah, there's a direct correlation between taxes collected and revenue, I think. So if you want to have a big government, and it seems like both parties do, then you got to pay for it one way or the other. So, Kay, we've mentioned your website a number of times. It's don'tmesswithtaxes.com. I'm a big fan of it, and I think everybody listening should go out and take a look at it. And we talked about your Twitter handle is TaxTweet. Is that right?
That's it. Yeah.
Okay. Is there any other ways that people can reach you that you might be interested in having them do?
I think those are my two main outlets. I spend too much time on Twitter, just like one of the candidates. I'm on there all the time.
Are you live tweeting at 2:30 in the morning though?
No.
That would be Hootsuite.
Well, thanks again, Kay. We really appreciate you coming by today.
Thank you. It was a pleasure.
Bye, Kay.
Bye-bye.
So I wanted to talk about a pretty interesting news story in the news right now, and that is that there's been an announcement by the IRS that over 7,000 people are going to lose their jobs because they're the people who actually process paper tax returns. That's astounding to me. Isn't that amazing? So what that means is that e-filing has become such a thing that 7,000 human beings are not going to be needed to open the mail any longer.
I'm surprised it took that long, honestly. Really? I mean, how long has e-filing been around?
So a long time, about 10 years, I think. But there's entire communities that are sort of wrapped around, these service centers. Austin, Texas is a big service center. So, thousands of people are going to lose their jobs there. Fresno, California. I think Memphis, Tennessee is another one. There's these huge campuses that the IRS has, and they use a lot of seasonal employees to go ahead and open these tax returns, and these people are not going to be able to have those jobs anymore. And so they're, in a way, I feel a little bit sorry for them, and in a way I'm kind of like, good, because, you know, we don't need those jobs if people are going to be e-filing.
Somebody will always hire them.
So it's about that time. It's time for the IRS train wreck of the week. And this is the segment of the show where we talk about somebody who came into the office and, frankly, they were just a train wreck. I mean, it was just a mess. They owed a ton of money to the IRS, and through our diligent efforts, things worked out just fine. This one is almost unbelievable, but I assure you it's true. Okay, so I had a husband and wife who came in, and wife was nearing approaching retirement age. I want to say she was maybe 65, 66, something like that. And she had a husband who was actually suffering from cancer. And for whatever reason, they ended up owing $191,363. So over $190,000. And the IRS was levying their paycheck. Now, the missus, who was the one working, was not making a lot of money. And husband had cancer, and he was sitting at home all day, probably suffering in pain. And the IRS started levying their paycheck and was making things even harder. I mean, I can't even imagine having my spouse go through cancer, let alone having the IRS taking, huge chunks of my paycheck and levying my bank accounts and things like that.
When it rains, it pours, though, right?
So
That's how it all happens.
Yeah. So we were able to contact the IRS and get them put into what's called hardship status, where the IRS agreed that, they couldn't afford to pay anything. But the problem was there was still a long time left on the statute of limitations. So the IRS still had a number of years to collect this money. And so hardship status wasn't really a solution. It was more of a Band-Aid. I stopped the pain, the immediate pain, which was the tax levies and whatnot. But they really wanted a complete solution. And I can remember that they were really super strapped for cash. And Mr., because he was going through chemotherapy and whatnot, he was communicating with us quite a bit, and he was not a happy camper. He was not a nice guy, quite frankly, and he was really, really hard to deal with. And he was kind of angry at the world. And I'm not sitting here in judgment saying that was even a problem. It's just the reality of the situation. He was a hard guy to deal with. And so when we filed the offer in compromise, we offered $50. And I have to admit,
and he owed $191,000.
Okay. And I offered $50, and I did this in part because I was slightly irritated with him, and I was way major irritated with the IRS. So I offered $50, and so they worked the file, and they come back and they go, "Hey, we got a problem here. We've got one of these liabilities is for the other spouse. So we have to do another offer. So you need to offer some more money." I'm like, "Okay, fine, $20 more." So for a total of $70.
$70?
I offered them $70. And I know there's people who aren't going to believe this, but the IRS took $70 on $191,363.
Now, how in the world did you get them to take $70 on $191,000 tax liability?
Seeing that I offered someone on Craigslist $35 for an $85 clock radio, and they wanted $50.
I'm usually pretty aggressive. I'm not usually quite that aggressive, but in this particular case, I was just sort of annoyed with the whole thing. I thought I would offer low, and they'd come back and say, "Well, no, come on, $70." I thought they'd say $500 or $1,000, and you got a deal. But I got the acceptance paperwork at $70.
I thought the same thing. It didn't work for me.
So that's the IRS train wreck of the week. That is actually my lowest offer ever offered and ever accepted. $70 on $191,000.
That's a pretty big spread. Like, I would just calculate the percentage on that just because it's so cool.
Look, I need you to call this lady today.
Well, you're listening to the IRS Solution Attorney Show. We had a great time today with Kay Bell. In case you missed her, you can catch up with her at Tax Tweet. You can get Darrin at Darrin_Mish.
Don't forget the podcast. Don't forget the app. This show will be there as well.
We're all around at the IRS Solution Attorney Show. I'll be back tomorrow with Tampa Home Talk. Thank you so much for joining us.
We're out.